Hi everyone, thanks for being here and welcome to the Groupon IPO Roadshow. When we started Groupon several years ago, we thought of it as this cool city guide, a way for people to discover great new local businesses and give them a try at a price that made it difficult to say no. Well, now we're 3 years into this thing and Groupon has obviously become much more than that. Not only are we helping consumers live their lives with twice the buying power, but we're getting merchants more customers in the door, which, as we'll show, translates into more profits. We're truly building a new platform for local commerce, a marketplace where we use price and discovery to connect hundreds of thousands of merchants across 45 countries every single day and create commerce that wouldn't otherwise happen. And with a market that's measured not in billions but in trillions of dollars, we're just getting started. We're really excited to be here, and we hope at the end of the presentation you'll consider joining us. So there are 4 main points that I'm hoping you'll walk away today understanding about Groupon. These are our investment highlights. The first is the model. It's a remarkable model that creates a win-win-win between merchants, consumers, and Groupon. Second is this enormous market. Many consider local commerce to be the last great white space that's been untouched by digital innovation. Third, competitive moats that have proven defensibility. And finally, we'll talk about expansions to our platform, which will unlock future opportunities for enormous growth. Jeff Holden, our SVP of product, will actually come up to talk about that final investment highlights. And following him, we'll have Jason Child, our Chief Financial Officer, who will talk about how these 4 attributes translate into fantastic financial results. So let's start by talking about the model. And I find the best way to do this is actually walk through an example of one of the deals that we talk about, one of the deals that we run every single day on Groupon. So this is a business called Ceviche. It's a seafood place in Louisville, Kentucky that we featured back in February of 2010. Now, they tried other forms of local advertising, and it's a great business. They've been nominated for a James Beard Award a couple times, but they still wanted to get more customers and found that traditional forms of advertising weren't working. So we worked with them to construct an offer, and what we came up with was a $60 voucher that customers buy for $25. Groupon keeps half of that $25. Now, we put this offer together knowing 2 things. First of all, the merchant, Ceviche, has an average check size of about $100. And for Ceviche, as well as most local restaurants, the cost of goods is about 33%. So when you do the math on that, it means for every customer that comes in the door at Ceviche, they're making about $20 in gross profit just off of that first visit. Now, this isn't an atypical example, and we provide an ROI calculator in our toolkit, our software toolkit that we give to every merchant to help understand the return and track the return on investment of their offer. So on feature day, we sent the deal out to 13,000 Louisville subscribers, and 800 of them bought. If you multiply that out, you get about $15,000 in gross profit. Just off the first visit of all those Groupon customers, and that's not including what is arguably the most valuable part of a Groupon promotion for merchants, which is the repeat visits and additional exposure that they're getting from their feature. That repeat business is what led Ceviche a year later to add a new expansion to their restaurant that holds an additional 60 customers. They needed it to handle the increased capacity. So with economics and returns like that, it's not hard to understand why in some of our markets we have a waiting list 9 months long of businesses that want to be featured on Groupon. Compare it to all those traditional forms of advertising. Groupon is the first form of advertising that's truly risk-free, where it's performance-based marketing. And merchants are paying for customers in the door, not calls, not for clicks. Second, the volume is unmatched. There's absolutely no other way that a business in one day can attract hundreds or even thousands of new customers. Third is the ROI. Look at the Ceviche deal where they're getting $20 of GP for every customer. It's as good or better than any other form of advertising out there when you look at a cost of customer acquisition. And finally, it couldn't be much easier. There's no complicated technology to learn. Our sales consultants work with the merchant to make sure that everything just works. And even though we work really hard to prioritize getting new merchants on the site to give variety for our customers, we still in Q3 saw that about half of our merchants that we featured had been featured in the past. So merchants like to work with Groupon again and again. So that's the merchant value. Let's talk about the consumer value now. Now, obviously, there aren't many people who like paying full price on things. The idea of getting something for half off is pretty universal, has universal appeal. But the great thing about Groupon is it's half off on the type of stuff that people buy every day. Most of people's disposable income is still spent within a few miles of the house. And this translates into great repeat purchasing behavior. So take a look at this chart that we have on the screen now. This shows the repeat purchasing behavior of our of a typical cohort of customers. This one joined in Q2 of 2010. You can see that quarter after quarter after quarter, they continue to buy at the same pace. Now, this gets into the third beneficiary of this model, which is Groupon. And this is the part where, this is a long presentation, but if I was an investor, this is the part that would get me the most excited, because it's certainly when we started to see this trending, it's what started to get us the most excited. It's really a characteristic of our unique and powerful subscriber model, where we pay a fixed amount up front to attract a subscriber to our subscriber base, and then we generate returns over time. So you can see here in this example, we recover our marketing costs, $18 million in the case of this cohort, within 2 quarters, and by the 3rd quarter, we're contribution margin profitable. So this is really one of the most phenomenal aspects of our business, and as soon as we realized it's happening, we decided to front load our marketing investment so that we could achieve scale as quickly as possible and create network effects and a competitive moat, as I'll explain more later. So that's the general model. That's how Groupon works. It creates that win-win-win. And all we're doing here is we're using price and discovery to balance supply and demand and help create more commerce. And this same commerce, this is another really important point, this same model that works so well for local mom and pop businesses like Ceviche, we found that it works on national brick and mortar retailers like The Gap or like Nordstrom. It even works in a local real-time deal marketplace, which is what we created with Groupon Now. Jeff will talk about that more later. And on top of that, we've gone outside of local and into entirely new categories like travel and product. And we've just started doing these things in the last few months, and we're finding that our customers are buying at the same kind of conversion rates as they do with local. It's been one of the most pleasant surprises that we've had is that we've been able to translate this audience because we have this trusted brand into buying things in other categories. And who knows where we'll go next. So this gets into the next major investment highlight beyond the model, which is the size of the market. Again, measured in trillions, not billions of dollars. 80% of commerce is still offline, and local commerce is our bread and butter. That's what we're going after. It's the largest market out there, and we're the largest business in it. So I've talked about this spectacular model, and I've talked about the enormous market. If those things are true, you'd expect us to have a lot of competitors, and we certainly do. So here's some of the larger competitors with no shortage of resources that we're going up against. And those are just the big guys. On top of that, we've seen thousands literally of startups get going that are doing the Groupon model and trying to take us on. And while the barriers to entry are low, it's proving to be true that there are high barriers to success. And the proof is in the numbers. Even with thousands of competitors, we remain 5 times larger than our closest competitor. Now, while we take these competitors very seriously, I think it's worth talking about some of the dynamics that have led us to be successful thus far. There are 5 main competitive moats, and the general theme, or the way to summarize them, is with this picture of a cyborg, which represents what Groupon is, which is a hybrid of human and technology. More than any other technology company, we've had to be amazing at both. It's in our DNA from day one. We have to be great at sales and operations, and we have to be great at innovation and technology. So the first of the 5 competitive moats is our culture of operational excellence. The second is having built a trusted brand. Third is our experienced and impressive team. Fourth is scale, which provides network effects and unlocks new opportunities for growth. And finally, the long-term investments that we're making in innovation and technology. So let's go through each one of these in a little more depth, starting with operational excellence. So to be great at local commerce, you have to get great deals. That's really what it's about. And that is a human-intensive operation. That's thousands of people talking to tens of thousands of merchants every single day. And we're better at that than anyone. We have 10,000 people who wake up in the morning and go to bed at night thinking about nothing other than how to get great deals in front of our customers. This is not a hobby. This is not a side project. We call our operations the deal factory because the way our deals are made is kind of our secret sauce. It requires enormous focus and attention to detail. So just to get one deal closed, this slide shows there's 10 discrete stages, some of which are human, some of which are using proprietary technology we've developed that we have to go through to get one of these deals going. Some of these stages might have 6 or 7 sub-stages. So for example, when a deal is ready to go live, it goes through a sub-stage of fact-checking where somebody looks at the write-up and takes all the pricing and compares it to the pricing on the merchant's website as well as any in-store menus. Because if you don't get all those little details right, you can have a deal go horrifically wrong and completely erode the trust of your consumers. That's something we've learned over the last 3 years, and we've built an extremely complicated and elegant operation to make it all work. And we're doing that for every deal in hundreds of cities across 45 countries every single day. So that's operational excellence. The second point is the brand that we've developed. And this is a brand that a Rice University study found has about 6 times the heart share of our closest competitor. So customers really love Groupon. And the biggest contributing factor is the quality of our deals. It's what, getting back to operational excellence, it's what makes us different from the deal sites that came before, and what makes us different from the sites that have come since. Every day on Groupon, we're featuring someone who not only has never done discounting in the past, they've never done any form of advertising. World-renowned museums like the Art Institute of Chicago or MoMA or Michelin star-winning restaurants. So deal quality is what keeps people coming back to Groupon time and time again, but it's not enough. We also have a real commitment to putting ourselves in the shoes of our customers and providing first-class customer service. The policy that amplifies this the best is probably the Groupon promise, which states if you ever use a Groupon and were let down by the experience with the merchant, we'll give you your money back. And that policy came, again, from just asking ourselves, what would it take to get us to buy a Groupon from an unknown business? Well, we'd have to really trust Groupon. And the Groupon promise is our way of showing that we stand behind our product. Third is our editorial team. And again, this is just illustrative of our commitment to our customers. We imagined what it would be like to get an email every single day. And that might get kind of boring after a while, so we knew we'd have to be a totally not boring company. So just in the United States, for example, we have about 400 people in an editorial department that's putting together really fun, engaging write-ups to accompany each one of these deals. And all those things go to creating a brand that people trust and allow us to do things like enter a new category like travel or products and sell deals at the same rate that we sell local deals. So that's brand. I want to move on to the third point, which is our team. Here you can see some of the executives at Groupon. We've really built an amazing team of very talented and experienced executives. And for me, arguably there's nothing that speaks more to our potential than the quality of people who have joined. Take the 2 people who you're going to hear from later today. You have Jeff Holden, who ran consumer products at Amazon, and Jason Child, who was the international CFO at Amazon. We have from Cisco, Cisco's former head of HR. We have Salesforce's former GC. And the talent doesn't stop at the top. It goes pretty deep. We've actually tried to create a culture of ownership that attracts amazing entrepreneurs at all levels of the organization. So take the head of sales in LA as an example. He's the head of sales in one of over 150 markets in which we're operating in the United States. And this is a guy who did 10 years at McKinsey as a customer care lead. And he was on track to become a partner before he left to join Groupon. Or take a city planner in London. City planner is a role that reports into the head of sales of London. And she actually got a PhD in neuroscience from Cambridge and was a hedge fund trader for Goldman Sachs before she joined Groupon. Now, it's not terribly uncommon. You'll find people with great operational backgrounds like this throughout the Groupon organization. Next is scale. First of all, scale allows us to operate really well in our core business. Being the biggest allows us to get the most customers and allows us to attract the most merchants. Great merchants want to work with the best brand in the space. We've also found that the huge number of competitors out there actually serve to overwhelm merchants, and they wash each other out, reinforcing Groupon as the market leader and clear choice. So in a sea of confusion where there's all these competitors, people just simplify and decide to go with Groupon. In fact, we've seen large competitors leave the space, citing competitor oversaturation as the reason. So that's a little bit about how scale helps our core business. But the real power of scale, the stuff that's really exciting, is that we can build new services into our platform that unlock our ability to truly revolutionize the way people shop locally. Now, people have been talking about local commerce and bringing it online for a very long time, really since the internet was invented. This idea of walking down the street and getting a notification on your mobile phone that there's a deal from a business nearby. People have even tried to build it, but nobody's been able to pull it off because to make a compelling product, you need to have an enormous density of merchants. To do that, you need to have a ton of customers, and to do that, you need a ton of merchants. It's a chicken and egg problem. Well, Groupon has reached the tipping point. We're the first company that's achieved the critical mass necessary to pull off a marketplace like that. You need consumers, you need merchants, you need operational infrastructure, and you need data. And we've built that marketplace. It's called Groupon Now, and Jeff Holden will be up in a bit to talk about that. Groupon Now in this marketplace is just one example of technology and innovation, which is our fifth and final competitive moat. Now, we're using technology and innovation to unlock deeper opportunities in local, products that will be part of consumers' everyday local commerce experience, like Groupon Now and many others. And we're also using it to leverage network effects and strengthen our competitive moats. Now up to talk more about that is Jeff Holden, our Senior Vice President of Product.
Thanks, Andrew. So I'm going to start off today with a few relevant bits from my background. I was at Amazon.com for about 9 years and split between two main areas. The first half of my time there, I was working on supply chain optimization technology, and we literally built the Amazon supply chain capability from the ground up, including inventory planning, fulfillment optimization, and so forth. And these were the underpinnings of Amazon Prime, in fact, ultimately. And I moved over about halfway through my time at Amazon to run consumer products and oversaw the personalization, technology, search, social computing, ordering, everything that constitutes the end-to-end consumer experience, all of which is very relevant to me here at Groupon. And in 2006, I left Amazon to start my own company called Pelago. And I did this because I saw the opportunity to revolutionize local with the onset of location and mobile technologies, as well as the burgeoning social fabric, and to create a much more powerful ecosystem, changing the way that merchants and consumers interact. 5 years down that road, I ran into Andrew Mason, and we had an amazing conversation, immediately hit it off, and it became clear to me that we should join forces immediately. The reason for that is because Groupon had achieved Amazon's scale, but we were both super passionate about this idea of revolutionizing local. So here I am, and now that I've been here for a while, I can report from the inside that the parallels between Amazon and Groupon are amazing. The culture, the deep technology bent, the talent here, the aggressive execution, all of it is remarkable. So let's jump in. Andrew talked about how Groupon reached a critical mass of consumer and merchant density that's enabled entirely new opportunities. So I want to talk about some of those opportunities and how we're capitalizing on them. And I'll start off with Smart Deals, which is our personalization engine, our personalized targeting engine. This allows us to put the right deals in front of the right people at the right time. And much in Amazon style, we've relentlessly innovated against this on both the algorithm side and the customer experience side. On the algorithm side, we've wired in several very robust and rich data sources, including consumer purchase history at a personalized level, deal performance, gender, even division-specific factors. We've learned about, and this is one of the things you can only do at scale, we've learned how people behave in, say, New York City versus Chicago, and we even can understand how people behave in Manhattan versus other boroughs. We have location affinities. We know, when a person's at location X, they're more likely to go to place Y than they are to place Z, just based on sort of patterns of movement. And on the user experience side, you can see here in my slide, we've created this new feature. We just launched this called Deal Types. And how Deal Types works is that Groupon tags every deal with thematic tags, things like adrenaline for people who love to jump out of airplanes or drive race cars around tracks at hundreds of miles an hour, good for two, or bring the kids. These are examples of deal types. And the user simply clicks on these deal types at any time to opt into them. And the Smart Deals engine just gets better. It learns this. It's a particularly powerful mechanism because not only are we getting feedback that people like the deal, we get feedback about what they like about the deal. And that's incredibly potent and really makes our engine very smart. It's also the first consumer visible feature right in the main flow of Groupon. There's a couple of really interesting characteristics about Smart Deals, one of which is this wouldn't even be viable at a smaller scale. You have to have a massive number of consumers and a very large inventory of deals to really do anything interesting with this kind of targeting engine. It also allows us to run many more deals because ultimately what Smart Deals does is it drives up the conversion rate. When we put a deal in front of a customer, they're just much more likely to buy it than if we didn't have Smart Deals. And so, what that sort of culminates in is a customer stickiness because, when people purchase, it's a very strong signal of their happiness with the product or service. And so if Smart Deals is our technology for putting the right deals in front of consumers, the lead optimizer is our complementary technology to put the right leads in front of our sales team. And it uses a very, very similar approach. We crunch a huge amount of data that no human really could ever analyze in the time frame that they have about people's locations, about what people are searching for, what searches were serving well and what searches were not serving as well at specific places around the world. A bunch of data points about merchants' businesses, past deal performance, and a whole long list of these inputs. And this capability, this lead optimizer, enables our sales team to just be extremely productive. There's just no way that they'd be able to find the number of deals they find and the quality that they find them without this technology. And it allows us to build a very large inventory of deals that ultimately feeds the Smart Deals engine. And what these two pieces of technology, the Smart Deals engine and the lead optimizer, work together in a sort of a perpetually improving, self-improving loop. And these things only work at scale at high density. And they're simultaneously making our customer base more valuable and creating a huge defensive barrier around the business. I want to talk about Groupon now at this point because it really puts in sharp relief how important this Smart Deals and lead optimization technology is, and it also shows how we're capitalizing on another huge opportunity. In fact, now is the most important innovation at Groupon to date. It's a true real-time marketplace for consumers. They can literally pull deals around them at any time. It's very different from daily deals, which is a push mechanism. This is a pull. And I can just literally be walking down the street in Chicago and decide I'm hungry for lunch, push a button in Groupon Now and see dozens of deals that are within walking distance of my current location. To do this requires thousands of merchants, and it requires a huge number of consumers using the product. And we've actually achieved that scale and that mass. From the merchant perspective, Groupon Now does for their business very much what Sabre did for the airline industry. It provides true yield management. So just like the airlines can turn a knob and change the price on a seat and see demand and supply match in real time, we provide the exact same capabilities for merchants. We give them literally a price knob that can change. They can say, my business is normally slow on Tuesday nights, and so I'm going to set the price lower on Tuesday nights, and they will see customers walk in the door that they otherwise wouldn't have seen. And this is the first time in history that anyone's even gotten close to being able to offer something like this. And it truly represents the next big step for Groupon. I personally believe that there's more potential here than for daily deals because there's just more frequent opportunities to purchase in Groupon Now than with daily deals. And I also believe deeply that this is highly defensible. It requires a massive density of merchants and consumers to even have a viable product here. It just doesn't work otherwise. And once it's running, it actually enhances and deepens the network effects in our marketplace. So to put this in the larger context of Groupon's mission to be the world's commerce operating system, This yield management capability that is provided by Now is one of 3 core components that we lovingly refer to internally as the Triforce. And yes, that is a Legend of Zelda reference for the gamers in the audience. The 3 pieces of the Groupon operating system we believe address the 3 core needs of any local business and address them better than it's ever been possible before. The first one is daily deals, which is basically a high ROI customer acquisition tool. The second one is Groupon Now, which is, as I described a minute ago, true yield management for merchants, allowing merchants to bring customers into their business when their business would otherwise be slow or empty. And the third piece is Groupon Rewards. And Groupon Rewards is about loyalty and retention. It's about giving merchants the power to drive repeat business. And this is a brand new capability that we've just developed. So I want to spend a minute talking about it. We wanted to create with Rewards the world's simplest loyalty and retention program for our merchant partners. And we also wanted to make sure that the rewards in the system were something that merchants care deeply about. And they care deeply about customer spend, how much customers are spending at their business. So we also wanted to make this unbelievably simple, just like fall off a log, simple to use. And so the way we achieved that was we actually tapped into the credit card and debit card transaction flow from merchants or at merchants from consumers. And this means that just with a simple opt-in from a consumer and a merchant, the program just works. It actually builds on what they already do today. So a consumer literally goes into a business and uses their credit or debit card. We see that transaction and we give them spend credit at that merchant. And when they cross the spend threshold that was preset by the merchant, they unlock a Groupon at that merchant. And this is powerful, and we know consumers will love this because one of the biggest requests we get from our customers is, can I just have a Groupon? Can I buy a Groupon at merchants I already love? This enables that in an economically viable framework for our merchant partners. So that's the third piece of that explains the Groupon, or that completes the Groupon OS. And we believe the Groupon operating system is going to add so much value to local businesses that and give them the ability to compete so much more effectively that they're going to just, every merchant in the world is going to want to use this. And because something like the Groupon operating system is only possible at massive scale and customer and merchant density, it creates a deep competitive moat around Groupon's business. So with that, I'm going to turn it over to Jason Child, our CFO, who will explain how this innovation translates into Groupon's financials. Thanks very much.
Thank you, Jeff. As Andrew mentioned earlier, I also joined Groupon from Amazon. I spent about 12 years there, all in finance, in a variety of roles, first as the corporate controller, and then most recently as the CFO of the international business. Before that, I spent about 8 years in Big Four public accounting. Like Jeff, I saw similarities with Amazon in Groupon, specifically as it relates to financial perspective. The desire to go after huge opportunities, the focus on long-term investment horizon, and optimizing for long-term free cash flow dollars. Andrew and Jeff walked you through the drivers that are widening and deepening our competitive moat, and I'm going to take you through how those translate directly into our financial results. There's 3 primary takeaways. First, record growth and impressive fundamentals. Second, significant operating leverage and high return on investment. And third, rapid and demonstrated improvement on our bottom line. Let's start with record growth. We measure our growth using gross billings, which represents the cash we collect from our customers upon purchase, and revenues, which is the cash that we keep after paying our merchant partners. Last quarter, our gross billings grew nearly 500% year over year to close to $1.2 billion, or an annualized basis of nearly $4.5 billion, while we grew revenues approximately 420% to over $400 million, or an annualized basis of nearly $1.7 billion. And also keep in mind that while our international business is already contributing nearly 2/3 of our global gross billings, our oldest international geography is only a year and a half old. With presence in 45 countries representing over 90% of global GDP, we believe the opportunity for global growth is significant. We have leveraged our daily deals platform to drive new category launches. Specifically in Q3, we launched Live, Getaways, and Goods. The success of these new categories greatly increases our market opportunity, and we will continue to invest aggressively into these initiatives in the short term. This approach is consistent with our general philosophy of focusing on long-term investment horizons and optimizing for free cash flow dollars. Fundamentally, these categories will have different margin profiles, and as a result, our overall gross billings versus revenue growth rates will be affected by category mix. Another key leverage point in our model is the subscriber and customer base that we have built and continue to drive for ongoing growth. We have spent roughly $800 million in marketing over the past 4 quarters, which has enabled us to amass over 143 million subscribers, nearly 30 million customers, and a strong global brand. However, it's critical to acknowledge that while we continue to grow our customer base, we have been reducing our marketing expenses both on a percentage of revenue and absolute dollar basis. A key driver of this is the viral nature of our model. Specifically in Q3, in North America, we added more unpaid customers than the total paid and unpaid number of customers added in Q1 of earlier this year. Not only have we built a very large customer base with increasing viral growth, we're also seeing consistent repeat purchasing behavior from our customers. Here's how it works. In the second quarter of 2010, we spent $18 million to acquire 3.7 million subscribers. In the 6 quarters since that time, the cohort of subscribers has driven over $200 million in gross billings, nearly $100 million in revenues to Groupon, and as shown on the slide here, about $43 million in contribution profit. That is 139% return on investment so far, and the return should only increase as the cohort continues its repeat purchasing activity. This repeat purchasing behavior is consistent across all of our cohorts, both past and present. The combined effects of our viral customer growth and repeat purchasing has led to significant operating leverage. Over the past 4 quarters, we have consistently and rapidly improved our consolidated segment operating income, which is GAAP operating income, less stock-based compensation, and non-cash acquisition-related expenses, from a loss of nearly $143 million in Q4 of 2010 to nearly break even in Q3 2011. In particular, our most established geography, North America, we have improved operating income from negative 25% to positive 12% in that same period. As we go forward, our investments in technology and new categories will provide further leverage. Turning now to the balance sheet. We have been free cash flow positive in each of the last 4 quarters, generating approximately $125 million. As of September 30th, we had over $240 million of cash on the books and no debt. Pro forma post-offering will have nearly $800 million of cash on hand. As we continue to improve the profitability of our business, we should see cash continue to grow and our balance sheet to further strengthen and serve as a strong foundation for our continued growth. With that, I'll turn it back to Andrew for some final comments.
Thank you, Jason. So that brings the Groupon IPO Roadshow to conclusion. In summary, I want to make sure that you walk away remembering our main investment highlights, the powerful model that we've developed. It's a win-win-win for consumers, merchants, and Groupon, the enormous market, our deep competitive moats and proven defensibility, and finally, the enormous opportunities for growth through our expandable platform. Thanks so much for watching, and we hope you'll consider an investment in Groupon.